Are you sure you're getting all the discounts that you want on your insurance? Do you deserve more? Is there something you're missing? You just know they're charging you too much. If you want to see most to all of the discounts that you can possibly get, grab pen and paper, get ready, because we're going to go through it. I'm just going to jump right into it. You've got tons of discounts. You can save up to 50% in your car insurance just through discounts alone. And these companies want to give them to you. They're out there. It's just a matter of them knowing that you qualify for them. Not all companies are really focused on giving you all the discounts. It's not that they're trying to hide them from you. It's just they don't think of them at the time, or they've done a lot of other things throughout their day. They've done different calls, and they didn't think of that one discount or those 3 discounts that you were supposed to get. I am guilty of it myself. I have done quotes for people, and I get near the end and like, well, what about if I took a safe driver course? I'm like, oh, boof, I completely forgot about that. First off, if you're married, that is a discount. Being married is a lower risk than being single or divorced or anything like that. Being a student, if you're under the age of 25, then you can get a discount for being a student. If you're under 25, then you may be qualified for a discount as well. Now, that's typically called the good student discount. That means you have either a 3.0 or better, which is a B on average. You can prove that because they are going to require your last grade report. So make sure that you have the document to back that up. Homeowners insurance. If you're a homeowner, just the fact that you're a homeowner, I'm not talking about the combination, the multi-policy discount. I'm talking about home ownership. Just being a homeowner is a lower risk than being someone that rents. If you drive lower mileage on your car, and when I say low mileage, that's anything below 5,000. So 5,000 or below 5,000 miles is considered a low mileage driver. The less you drive, the less risk there is on the road. So make sure that your insurance person knows, hey, I drive this many miles. And then they'll be able to determine how much that risk is. Not all companies use mileage as far as a rating factor. So you may get some that don't particularly care to know that part of it, which is fine. I mean, it's okay to mention it to them so that at least they know about it. The security system in your car, if you have an alarm system, there's 2 versions. There is the standard alarm system. I believe they call it passive, if I'm not mistaken. But that is if you have an alarm. Someone breaks in the car, they open the door, the alarm goes off, sirens. The other one is LoJack. It's like a vehicle recovery system. The easiest way to think of if you have it is if it's like an OnStar or a Blue type shield, and it's something that you typically pay a service for. Basically, if somebody steals your car, then they're able to track the vehicle and find it and then recover it. It's going to give you a pretty good discount if you have a LoJack system. Your typical vehicles would be any GM that has the OnStar. It's usually in the rearview mirror, or any vehicle. Usually a lot of BMWs have the LoJack system. Not really a lot of Toyotas or Hondas unless you purchased it separately. Being a safe driver, that's another discount. A claims free renewal, they call that. If you have been driving and you don't have in the experience period, which is typically 3 to 5 years, depending on the state that you live in. So if you have no accidents, no tickets, no violations, things like that, you're considered a safe driver. That will give you a pretty large discount with insurance. One of the largest discounts is called the multi-car discount. If you have 2 cars or more on a policy, then that'll give you a very large discount. Now, a lot of people think if I have 3 cars, it'll give me a bigger discount. It doesn't matter. Typically, once you add that second car, adding the third doesn't really make much of a difference, although you'll probably get a little bit, but it's still going to go up in a pretty good increment. If you live in a household, let's say you got mom and son or daughter, whichever you prefer. So mom has her own policy here, daughter has her policy here. The best way to do it if you live in the same household is combine the 2, have mom the primary and daughter the secondary. So what that'll do is it'll take not only the multi-car and put them together, but it'll also have mom's experience because she's likely driven a lot more. I hope so. She's likely got a lot more driving history than daughter. And because of the age, depending how old the daughter is, if she's under 25, that's going to raise the risk. If she was on her own, she'd instantly have a high risk right there, where if she's under mom, it's going to be a lot lower of a risk. The negative to that, or the downfall, is if either of you get into an accident, you are both liable for that claim because you're on the same insurance. They could not only sue daughter, but they can also sue mom. If you do that, make sure that you have the correct coverages. Personally, I would do it that way. mainly because I would make sure that I have enough coverage. That way, if daughter had an accident, she's covered enough. But I would also have her pay her portion that she's raised my insurance that much, within that parameters. Decide what you guys prefer in that situation. It really depends on, how much you want each other to pay. Typically, I would say the parent is only going to pay about 30 to 35 to 40% of the insurance, and then the child would pay the rest of it just because of the risk that it raises up. It differs. So talk with your agent if you have questions on that. Credit does make a difference in insurance. And I know you say, I hate that fact. I hate that fact. It's one of those things where it's not so much your credit score, it's called a consumer report. So what they're looking at is your ability to pay things. If you have multiple bills that are past due or in collections, that's going to hurt your consumer report. It's easier for somebody to just say, times are tough. First thing I'm going to cut out is insurance, because that's usually the first thing that people think about is, if I can't afford car insurance, I can't afford car insurance. I'm just going to drive the way it is. No one's going to sue me for nothing. That's really the thought process. It's a really broken thought process, but it's true. So they do a consumer report. Even if it's bad, don't stop quoting with a company, because it's not that big of a rating factor. One discount that you cannot get later on is called the early shopper discount. Most companies give this discount. So the way it works is, if you purchase a policy typically 7 days in advance. So if I know that my insurance ends a month from now, and I purchase it today, or at least 7 days before that month ends, a week in advance, they'll give me up to a 3% or more discount on my insurance. I didn't do anything different except for prepay for the policy. The nice thing about that is, some companies let you post date it. So I can, even though I'm checking the month ahead, they'll let me put it up, put my credit card on file, put my account on file, and then it won't take the payment till that day, that 7th day in advance. Occupational discounts, those are really good discounts. It's not to say that your occupation doesn't matter if you don't qualify for it, but typically you got to think about what the insurance company is thinking of. So doctors, nurses, teachers, engineers, degrees, typically that type of occupation is going to get a discount. If you have your own medical insurance is a very large part of insurance. In some states like Michigan, New Jersey, New York, and there's several other ones, they actually require that you carry medical. However, if you have your own medical insurance, then they're going to allow you to do what's called a coordinated medical benefits. So that means you can say, you know what, I've got my own medical insurance, put me as the primary. So if I get injured, my medical is going to take care of me first. And then if it runs out of money, then the insurance is going to come in secondary. So that way you're satisfying the state's requirement to have medical, but you're also saying, I'm paying for it over here. Don't charge me for your medical on top of it. That will lower the rate as well. And that's actually a pretty good, considerable discount. If you've taken a defensive or a mature driving course, in order to take a mature driving course, you have to be 55 years or older. That is typically done through the DMV's website. It lasts for about 3 years, and this is the same thing for the defensive driving course. It lasts for 3 years. You get a certificate. Keep that, because they will need a copy of that for your insurance just to prove that discount. They will give you these discounts based on you saying them, but don't try to trick them, because they're going to want proof of stuff like that. If you're an engineer, they want a copy of your degree showing you're an engineer, because they're giving you a discount. If you're a good student, they want proof that you've got good grades. If you're a safe driver, they already know that because they're going to check your DMV records. You get the gist of it. If you're a defensive driver, they're going to want the certificate showing that you're a defensive driver. It's easy to take. It's cheap. Look up your local government's website. You can usually take them online. How you pay makes a difference in the cost of the insurance. So if you pay monthly, if you pay quarterly, if you pay every 6 months, and some companies let you pay a year, each step you go is typically going to give you a discount. So you're going to get charged the most for monthly, especially for using a credit card. You're going to get charged sometimes a little bit less. Sometimes it's the same as monthly if you do quarterly. But if you pay 6 months or more in advance, that's usually the best way to do it. How you pay also makes a difference, not just how much you pay. So if you're going to use a checking account, Some companies actually give you a lower rate because you're using the routing and account number instead of an actual credit card. Because when they swipe those cards, it's all done electronically, but it's still the same thing as swiping them. They get charged their 2% or whatever percent fee, and they're going to add that into the price of your insurance. Affinity discounts, those are really good ones. You may not know that you're part of an affinity group. If you have even your local bank, if you're part of a credit union, they may be attached or affiliated with an insurance company. So check with them, ask them, say, hey, are we affiliated where I can get a discount on any type of insurance with you guys? Or AAA membership, any type of membership, gun memberships, those usually give you a discount. If you're part of like a Chrysler employee, different companies, Honda, they usually partner with companies. So anytime you buy a new vehicle, see if they're partnered and you get discounts. The only thing is, those aren't big enough discounts to make a major difference. They can save you some good money, especially if you're part of a union. I hope that helped, guys. If you like it, thumbs up. Don't forget to subscribe if you want to get more tips and videos for insurance. And I don't have an outro, so I'm just going to do something weird. Bye. Give me a discount.